What is up, good people? Jungle Link here. Hope you're doing well. Pretty strong day for crypto. We see Bitcoin hanging in there, up about 1.5% on the day, sitting at 67,000. Ethereum up about 2.5%. Big day for the BNB coin, up 9%. With all the turmoil going on over at Binance, BNB stays strong. XRP, pretty flat, up less than 0.5% here. You know, we see a lot of meme coins continuing to fire off. Head over to Twitter, watch a video by DM Logic, and he does throw it out there. You know, we've seen these huge runs of meme coins. Now's not the time to jump in there, but he talks about in the future paying more attention to that sector, looking for good opportunities there. And I really like him because he looks at what he's doing, how he can improve. And from my standpoint, meme coins aren't really a major sector that I invest in. There's so much out in cryptocurrency, so many different sectors, great projects out there. You can find kind of what your game is. And for me, it ain't meme coins outside of a bull run gamble here or there. But, you know, it's something to think about as you start seeing maybe areas you ignored. If that might be something you want to pay attention to in the future, check out DM Logic's video there on Twitter today. Always good when he puts something out. One of the brightest minds in crypto. We see this article here. This Bitcoin rally seems different in several ways, but one thing stays the same. I heard this from Tom Lee today on CNBC. We see Bitcoin's latest surge coincides with a burst of tech optimism on Wall Street, so traders might want to keep a close eye on the potential decline in the NASDAQ to S&P 500 ratio. The persistent positive relationship suggests that the inflow of money into cryptocurrencies and emerging technology is linked to a positive outlook for technology stocks related to the broader equity market. Essentially, investors are making a correlation here. When tech is doing good, guess what? It bleeds over into cryptocurrencies. Guess it's pretty sensible there, isn't it? The crypto community has been focused on market flows this time around rather than the narrative of decentralized finance and Web3 and how this will revolutionize traditional finance. And that's been true to date, of course, with the, Bitcoin ETFs, and on the horizon, we'll probably get an Ethereum ETF and other ones. That's been still on the show here, but we're going to go back to other areas like DeFi and gaming and Web3. Like, that's all there. Storage. Do you have any cloud, sector plays, things like that? These will emerge. It's not just going to be about the Bitcoin ETFs and the inflows those create. That's the story right now. But bull runs run a long time, and you'll cycle through these various narratives, and people get excited about different things. So it's still very early on, but that is true. Right now, most people are focused on all that money that's flown into the crypto market, made possible by the Bitcoin ETF. Another factor that makes this rally stand out is the price has surged despite signs of a strength in the US dollar and treasury yields, as opposed to 2020 and 2021 when they were weakening. So that's a little bit different. Usually when the dollar is weakening, we see a surge, a fleet in cryptocurrencies. There's always going to be different wrinkles here, isn't it? It's never going to be the perfectly reporting pattern. It seems like every time we go, aha, this is what is going to be our guiding light. Well, the next time around, a little bit different. But what we know over the long run, this space is going to continue to go up. And that's really what matters here. AI tokens skyrocket amidst Nvidia's market momentum. And this is another one of those links between crypto and technology. AI tokens see over 15% rise driven by Nvidia's market momentum. I think it's a sector you have to be invested in, AI tokens. We are going to have a continuous flow of huge news from AI, and it's going to bleed over into crypto. If you want to know more about this, I keep saying it, watch Nick Black. Every single day he does a live stream. If he's not the smartest person in regards to AI and crypto, he's darn close. Every day, 1 hour a day, he puts on a clinic. Watch his live stream. He knows especially this sector better than anyone out there. He's going to give you a lot of good information there. Market cap of AI sector coins hit 37.4 billion. Render, Fetch AI, and Singularity Net lead the way. Of course, I have some Fetch. I have some Singularity Net. I don't have any Render, but I know my good buddy DM Logic does. Pay attention to the AI sector within crypto. It is going to continue to have, an upwards momentum as we continue through this year. It's only going to get more violent as AI really starts to pick up the pace. Why this meme coins, again, gave 1000x returns within a week. I mean, it's just people betting on craziness. Let me know down below. Do you make significant investments in the sector? Because I know a lot of serious crypto investors do. You know, it's not just for gamblers. It's a lot of people that know it inside and out. They make an allocation. We're all in this to make money. Nothing wrong with that. Just because I don't invest in meme coins in a significant way doesn't mean you shouldn't. Let me know down below. Do you have an allocation to that sector of cryptocurrencies? SEC Chair Gensler cautions about crypto investing, warning thousands of crypto tokens may be securities. I really wish we could take that maybe and have some tests so we all know which ones are securities. Both investors, entrepreneurs, the whole market, this shouldn't be a maybe. Like, if anyone would know, it should be, well, the SEC chair, I would think. U.S. Securities and Exchange Commission chair Gary Gensler has cautioned about crypto investing. This is a highly speculative asset class. One could just look at the volatility of Bitcoin in the last few days, and we understand this. It's actually what we're looking for. We're looking for volatility. That's what gives us this crazy growth cycle we're in right now. You know, you got to be responsible with this. You have to understand the risk and the reward. But this guy's just a puppet. He's a clown, and I can't wait till we get rid of him. This is a related article from Axios. How a big crypto villain helped fuel Bitcoin surge. And it actually is true, even though I don't think he meant to do it. Bitcoin's long and tortured journey to new all-time highs this week has an unlikely hero. And I have a hard time calling him a hero, this guy. SEC Chair Gary Gensler has been antagonistic towards crypto, but he gave Bitcoin an improbable yet undeniable seal of approval. That was the approval. The Bitcoin ETFs really paved the way here. The truth is, though, not really him, is it? It's Grayscale. They took him to court. They sued him, and he had to make the lawful decision. He could no longer arbitrarily deny Bitcoin ETFs just because his little puppet masters tell him so. So I would say he's not really the hero. I would say it's Grayscale for having the guts to take them to court, and then the judge for making the correct decision. That's the real hero here. But Gary Gensler, definitely a villain, and whether he meant to or not, he gave us a big leg up here by getting those ETFs through the front door here. Next article, BlackRock files to purchase Bitcoin ETFs for its global allocation fund. This makes a lot of sense. I mean, it's a global asset class. It hedges against, currency risk. It hedges against geopolitical risk. So I think we're going to see more of this type of allocation in all sorts of funds and all sorts of investors' portfolios for exactly that reason. This is what crypto's built for, and it is a truly global asset that can't be taken down by one region's problems or one country's currency issues, things of that nature. It's going to become more and more appealing as we go forward. Lastly, BlackRock, Fidelity together rake in more spot Bitcoin ETF inflows than Grayscale is losing. So Grayscale continues to bleed. It's just a bad product, really high fees. I guess they just can't bring them down. You think they would. They should have an easy lead here, but they refuse to do so, so people are going to flee out of that product, and they're going to go to better ones, cheaper ones. Over the long haul, those fees make a huge difference, and the good news is it's not just those outflows from Grayscale. BlackRock and Fidelity are more than making up for that with inflows of their own, kind of balancing things out and adding a lot more volume to the market here. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.